Welcome. Today is March 19, 2030. Now it's approximately 8:20 New York time PM. This is a daily chart of dollar yen. And let's talk about a trade that I have made on this Monday on dollar yen. By this daily chart, we can see that dollar yen is at strong uptrend. It's bullish trend. Let's put our moving averages here. This is the 200 and 100 moving averages. These are the 50 and 20 moving average. We can see that by these moving averages, market is at strong bull trend. But despite being at bull trend, there's something that I would like to show you. Market has made this down swing and made another attempt to establish the bull trend with success. But it has reached the 1618 extension of this swing exactly at this point. It's important because it could be the head and shoulders reversal pattern. Market could be forming the left shoulder here, the head, and could be forming the right shoulder here, be descending the head and forming the right shoulder. This ratio is typical for the head and shoulders pattern, the 1618 extension of this swing to the upside. So we must pay attention, because this is important resistance. Market was congested at this area, and by Friday's candle it has broken below this congestion and has started the down move. Let me show you a trade that I have entered on this Monday. Let me show you the foundation of this trade. Let's shift to the hourly chart. This is an hourly chart of dollar yen. We are mainly intraday traders. We take position based on intraday charts, especially the 1 hour and the 4 hour time frames. Let me put the moving averages again. Here they are. And market has formed a reversal candlestick pattern, that is the shooting star. This right at an area of important resistance, that is the 200 period moving average and the 5th period moving average. Especially the 200 period moving average, it's an important zone of support and resistance for the market. It has been broken on the hourly chart and now is being retested from the downside and has made this important reversal candlestick pattern, the shooting star, testing this both moving averages at the same time. At the same time, there are other factors that give additional resistance to this area. Let me put the 4 hour time frame. This is the 4 hour chart. We can see that we are at important Fibonacci resistance area. It coincides with this zone of the moving averages on the hourly chart, and we can also see that this is classical technical analysis resistance. It was previous support, has been broken to the downside, and now it's being retested again. So it's an important zone of resistance that we are right now. So we have taken this trade. Another factor of important resistance was that yesterday on this zone was the daily pivot point for Monday, March 18 on dollar yen. So all these factors combined with a reversal candlestick pattern have made a trade for me on the short side. I have entered short right at this level, using this bar as my foundation on this important zone of resistance, and I have entered with a stop entry order and placed the stop right here. Why here? Let me show you. Pivot points. I've placed the stop beyond the weekly pivot point. Market has opened this Monday with a strong down gap, has recovered, has closed this gap on the same trading session, and market is trading below the weekly pivot point. It's a bearish sign. Also, this gap gives important resistance to this area. So I've placed my stop beyond the weekly pivot point, and on this Tuesday it's also beyond the daily resistance 1, beyond this area. That's where I hid my stop loss. Also, other structures that we can see here, that market has completed AB equals to CD pattern. Here, A, B, C, D, reaching the 100% extension, completing this pattern. And now market is turning to the upside. After completing this ABCD pattern, we can expect some more important impulse to the upside, and that has happened to us. Market has reached the 618 Fibonacci resistance, another resistance on this area. Well, it can be expected after completion of ABCD that market shows some important retracement to the other side. And now market is forming another AB equals to CD pattern right here. Has reached the 618 extension of this pattern that also has given us more confidence to enter on this trade, because it adds one more structure of resistance, and maybe market could proceed higher to the 100% extension of this ABCD pattern. So that's our trade. We must now wait and see what will happen. By trying to reach this 100% extension of this ABCD, market can be forming another intraday pattern, that is the butterfly cell. Here is the butterfly cell. I will draw it to you. Butterfly cell. 127 extension stands here, and 1618 extension stands approximately here. So market could be forming this butterfly and turning to the down move again. By reaching the 618 extension of this ABCD, market has made the 38 fib support. It has hit this area, suggesting that it could continue to the 100% extension right on this area. So that was my trade based on this confluence of many structures that give it resistance, but mainly due to this candlestick pattern formed right at this moving average and daily pivot point. Let's recall what were the resistance. First, technical analysis, classical resistance, right? Was support, break it, no resistance. Fibonacci resistance, 618. Daily pivot point that was on this area, 618 extension of ABCD. All of this combined with this candlestick pattern and mainly the moving average, especially the 200 period moving average that has been broken, has made a trading signal for me. So I have entered short. Maybe market will accomplish this butterfly. Maybe I will get stopped. Maybe I should put my stop loss a bit higher beyond the 1618 inner butterfly on the 15-minute chart. Maybe I could do this. But original plan was to place stop based on this candlestick pattern and based on the weekly pivot point. That's here, so stop is placed here. Now let's just wait and see what market will give to us on this trade. Thanks for watching.